Good morning, everyone. It is Thursday, December 4th. So I had some high impact news this morning. U.S. initial jobless claims came out at 7:30. Had a kind of a small spike here. Nothing crazy. How's everybody doing this morning? Let's have a good morning here. Unfortunately, price action has still just been pretty we had a nice little move to the upside, nice little move to the downside. There was an area right here that looked a little bit interesting, but again, just kind of too early in the morning for me. Let's take this guy off just so we can see some clean charts. All right, here's the setup we got on the NQ just off that push right now at the 25,635s. Targeting the 25,627.50. So again, entry at the 25,635, TP1 at 25,627.50, TP2 at 25,619.75, and a stop at the 25,642.25. And this one seems to be coming quick. Like to see this a little bit later in the morning. Let's see here if we can get a nice little early win in. Wow, that was quick. Zero drawdown, TP1 real fast, really fast. I didn't even have time to adjust my ATM on that one. Nicely done. I know that one came quick, guys, but that was a beautiful setup. Zero drawdown on that one. And there was TP2, I believe. Maybe a tick short of TP2. There you go. TP1, TP2. Beautiful trade. Beautiful trade. R-Shock. So the initial balance play for me, I'll put on the indicator here. So the initial balance is the first hour of the market. So you've got for me it's the 8:30 open if you're Eastern time, 9:30 open, and that is so that goes from 8:30 to 9:30 for me in Central time. And you mark off the 8:30 high and the 8:30 low. And this is going to be a moving indicator, moving target until 9:30. Then it locks itself in place. And then what I'm looking for in that scenario is that when price action taps into my IB low or high, I wait for a footprint candle to either tap the line or to go through it. And then what I'm looking for in a case of a long off the IB low, I would be looking for a green footprint candle with negative delta. And the complete opposite on the IB high, we'd be looking for a short. So I'd be looking for a green footprint candle like the one you see right here. I'd be looking for a red footprint candle. Kind of waiting to see if one forms here. So right here, we've got a red footprint candle, but I would need to see green positive delta, and that's my confirmation to take that trade. It's a set 15-point stop and 15-point take profit. I take it from my footprint confirmation, so sometimes it'll be 2 or 3 points underneath. It could be right on the line. It could be a little bit above. The other easier strategy is just a resting limit order on the IB high and still targeting that 15 point stop, 15 point take profit. I turn the IB indicator off probably till about 5 minutes before the 9:30, just because whatchamacallit? Just to keep my charts clean. Yeah, that one came really quick, guys. No, there's absolutely zero chance of me posting that one. I barely got enough time to even put my limit order in. And to be honest with you, I mean, that was kind of a break of my rules. I mean, that was at 8:36, that entry, maybe 8:37. I typically like to wait 10 minutes, but it just seemed like such a easy reactionary zone there. But there'll be more. I sure did come in hot. Morgan, I hear you got a bad fill on that one, but I'm assuming you still took profit on that one, right? Because even with a bad fill, I don't think that came close anywhere near our stop loss. And let's see what the screenshot was said. Let me just see how much risk that was on that trade. Trying to take some added statistics here. A few things that I'm looking at. Let's see. So that was about 7 points. 7 points of risk on that one. But again, that was maybe a point of drawdown. I don't know, maybe about 5 or 6 ticks. Actually, no, I think it was less than that because it originally literally stopped right on the line, took the entry, and then hit TP. Well, it hit my 10 points, so I think I took, I got out at 625, and then I think it came right back up, and then that's when this wick increased a little bit. So I think the initial reaction was dead nuts on the entry line there. But that's what we're looking to. That is my ideal A+ setup. 0 drawdown, reaction point right at our entry, quick TPs. Easier said than done, but that's what I'm looking for on every trade. That's exactly, Morgan, that's exactly what I am. That's exactly a project. And I might even, what's the word? Commandeer some of my Signal members for some help on some previous months. Because I'm actually looking at, I am looking at trying to figure out on average what the size of the move is off of the reaction point. And I think that might help some people maybe stay a little longer into these trades. I remember doing the statistic back in, it was either March or April. And I want to say that the average move off of a TP was in the 25 to 30 point range. But I kind of stopped. I mean, I got so busy and I kind of stopped with that, but I'm all about data. So if I can figure that part out, because then, you know, there's different options that you could do. You know, with Ninja, the nice thing is that you've got the ability, to set these ATM strategies. Okay. You know, why was my chair so low? You can set the strategies to, you know, let's just say even if you want to go down to the micros, okay? You go to, let's say 10 micros. Some thoughts that I had was you take 10 micros off the entry. You take your first 5 micros off at TP1, and you then let your 5 micros run to an average position of like an average position that the data shows. And let's just say even if it's 15 to 20 points, even though you're on 5 micros, that might equate to a much bigger trade. That's going to be probably in the $300 to $400 range. Well, but maybe about $300 to $350 range. I gotta lower this now. Too little. Hold on. I have some issues in my chair here. And let the five micros run, which would actually equate to a bigger take profit than 1E mini. You know, I always say, I even put a video out for my Signal members, that the easiest way to trade my signals is a resting limit order targeting TP1, which is, you know, on the NQ is going to be that 6 to 8 point range on average. And then, you know, still having your stop put in place. That's always going to be a pretty close to a negative risk to reward, because my stops are typically 8, so it's close. Some of them are a little worse, some of them are a little better, depending on what I see for defense. But yeah, that's something that I've been thinking a lot about lately. But again, it just takes time to dedicate some resources to the all my signals hit, man. All my signals hit with high. You know, the last couple days, I would say since Monday of last week, the just the price action, honestly, has really not been that great. I posted it in Discord in the Signal service yesterday. I mean, when you're seeing this, the only reason why we even got a trade this morning was because of that push. This is what you need. You need some movements out of areas. I need impulse. I need break of structure. There's just a lot of stuff that you need for a setup. And when you got a market that is doing this, you might find one, maybe two signals in all of this. And then we have this, even this impulsive move is all starting from areas that have been all balanced out. So it's been difficult since probably, I think, the Monday or Tuesday of last week before Thanksgiving. The market just has not been conducive to volume-based trading. Now, if you had a strategy for just ranges, tiny ranges, yeah, I guess, but the range is good until it's not. So for those that have just joined the Signal service or the, on YouTube, you got to stay patient, man. You'll see that in the end of the month, they'll typically always be 15 to 25 signals posted, which correlates to almost one a day. But some months are worse and some months are better. I can't force a setup. I can't force a setup to, in all this kind of chop crap that we've been sitting in. So it's not because of lack of trying. It's just that there's nothing there. And if you're looking for 4 to 5 signals per day, this service isn't going to be for you. Now on stream, you see I find two setups, 3 setups. I post what I can to the Signal service, especially my A+ setups. But like, for instance, that trade right there, that came, I had seconds to even finish coloring in my lines to see where the entries were, and then to put my to put my entry in was a few seconds later. So it's not going to all be a perfect fluid movement, but you got to stay patient and you'll see the results come in. Let's take a look at the ES. We haven't talked about the ES today. Let's take this guy off too so we can clean up our charts here. Again, the ES, it's the ES is pretty much the same scenario. This is from yesterday. This is from yesterday at 11, from 11 a.m. to today. I mean, this I love. I love this movement up and down. Fortunately on the ES, I need a little bit more continuation. This just, this is tough. I don't need this box anymore. Don't need this here anymore. Oh, no. This is drawn by a strat. Oh, I thought I turned this off. Oh, I took my volume profile off. And this is just very consistent. Look at this. I mean, this is all the same. This is all the same range. Talking about like a 15, 20 point range. It's tough. We need a little bit of movement. And you'll see it. I mean, sometimes depending on the day of the month, they might change here a little. on, I'm not that smart, man. I don't get paid that kind of money to figure that out. This is what I can tell you. This is from what I see, and this is just the industry I'm in. So obviously, you guys all know I'm in the real estate industry. I've been a managing broker and owner of a real estate franchise for I've been owner of a franchise for about 17 years, Remax here in Chicago, and but in real estate for over 23 years or something like that. And to feel like I have some experience in that field. I've sold over 1,300 homes and been always ranked in the top producers in the area or in the city. What I see is I see employment worse off than what a lot of the, actually, you know what, let me just see what did the unemployment numbers come in, or the initial numbers come in today. So initial jobless claims came in at 191. Okay, so about 30,000 fewer than what was expected. But see, like that, those statistics on the jobless claims and the initial jobless claims, I feel maybe are worse than what they show on these reports. People are not making the same income or revenue that they were a couple of years ago. I see that in the real estate industry. I actually have been noticing foreclosures in our area increase, actually pretty dramatically. In Illinois, it's like, I think, leading the entire country in foreclosures, maybe followed by God, I don't know what the other state was. I don't want to say the wrong state, but it's up there. So, so I see that the general economy, I feel, is worse right now than maybe it was a couple of years ago. I think inflation's getting a little bit better. Obviously you see it at the gas pumps. It's I think it's like $2.75. I'm honestly not too I'm not too in tune with gas prices, but I saw it because I drive an electric vehicle. I drive a Tesla, and but I did see a report that it's under $3 for the first time in like 4 years or something like that. So I know that that's coming down. The cost of goods at like Costco, I think, have pretty much stabilized. I don't think they've gone down or up. Some reports say that they're improving a little bit. Some say they're worse. I think it just depends on which avenue you're looking at. And then you've got the stock market, where the stock market is still, pretty close to all-time highs. It's still ripping, and a lot of people think it's overbought, it's overextended, and the market keeps proving everybody wrong. So it's hard to say. It's hard to say if we're going to be in a recession in 2026. But I think the everyday American, I think right now probably has less money in their pocket than they did a few years ago. That's just that's what I see. Like, because I'm talking to buyers, I'm talking to first-time buyers a lot. People that, who I feel really bad for are the people. I don't necessarily feel terrible for them because they're in a great situation currently, but it's those people that need to move for one reason or the other. And, we talk to them, they've got fantastic equity in their house. And we get to the conversation of what their current rate is, and their rate on their mortgage is like 2.75, 3%. And they're like, well, it doesn't make sense to go out and get a 30-year 6% rate on an overpriced property. And to be honest with you, I got to agree with them. I'm very transparent as a trader and as a real estate agent, and I agree with them. I agree with them wholeheartedly. I'm like, if you can stay, that is your best option right now. It's the people that, for one reason or the other, divorce, employment move, downsize, retiree, unless there's some kind of desperation to move, That's who we see listing right now. It's not your, the family that's just maybe looking for that extra bedroom or be closer to a school or whatever the scenario could be, because they've got such a fantastic rate where they're currently at, and it's a big problem in my market, a very big problem, because we need inventory to go up for prices then to gradually come down. And trust me, and overall, I know we all want to see the value of our asset to increase, but we also need a healthy market, just like you need a healthy market in the indexes. We need a healthy market in the real estate market too. America is really built on service industry right now. So, it's the insurance, financial, real estate, technology. A lot of those are just service based. I mean, I know that we're trying to bring back a lot more manufacturing and more industrial, which, to be honest, I think we need, because we can't be so dependent on service. But you see, I mean, go out and try to find yourself an electrician or a plumber or somebody that knows how to work with their hands. They're becoming limited and they're super busy. They're expensive because they're in demand. We've become just a service-based industry sitting on chairs for the most part. And unfortunately, a lot of those jobs are going to be threatened with AI soon. Well, maybe not soon, maybe in the next 4 or 5 years, but a lot of those financial analysts and financial people that, graduated with their financial degrees, that are like analysts that were making $150,000. I mean, AI is getting really good at doing your job. So it's, and it doesn't stop there. It's not, I'm not picking on financial. I mean, I'm in the same business. The only difference with my business is that I physically have to go show somebody a home, unless they figure something else out for that, which they could. I don't know why we got into this rant, but so that's my macro view on the economy, I guess. U.S. factory orders, month-over-month actual, 0.2%. Forecasted was 0.3%. So it came in a little lower than average, or what they were expecting. Tomorrow we got, 9 a.m. is a great, will be some great headlines. We got the University of Michigan sentiment. We got PCE price index, U.S. factory orders, U.S. core PCE, U.S. consumer spending, all at 9 a.m. So that'll be interesting. All right, so now if the ES, what I would kind of be looking for on the ES is to break in that 68, like the 68.39. We're pretty much, I don't even have to draw it, but I guess where this point of control is. Excuse me. Where this point of control is, we can have a break of structure here. And then I would be interested in taking a look and see what it left in its tracks up here. NQ has had more of a, let's go down to the 1 minute just so we can, it might be a little bit clear. So it left a little area right up here, but this is sweepy to me. And then you can see that all of the steps down, volume it's gotten balanced out on pretty much all these moves to the downside. So for me, the dead zone right now is pretty much all of this is untradeable for me. And then this pocket right here, which, you can find a setup in. The only issue with this one becomes this sweep right here, which I'm not interested in. kind of felt like market was kind of poised for a bigger move today, or maybe at least a big fake out, but it has not shown that hand yet. All right, so we got about 27 minutes for IB. I'll be right back. Do you think this problem, I'm assuming, do you think this problem in real estate is only in Chicago, though, or is it a trend real estate countrywide? No, this is a trend. It's definitely a trend. There's about 10 states that have already seen over 10-point increases on their foreclosure filings. You got to remember that depending on the state that you're in, the foreclosure process can take 6 months to a year. In some states, it could take almost 18 months. So a lot of that data is kind of lagging for the most part. But I think that's going to be countrywide. You know, you've got some states that are insulated pretty well. I would say, you know, Florida, I know the condo market is being pretty devastated. And I think that has a lot to do with the HOA rules that were implemented with that collapse that happened, that Seaside collapse. The strain that they're putting on HOAs is it's a financial disaster for them. So I don't think it's not of a lack of interest. It's mainly regulation there, needed or not needed. I mean, obviously you had a building collapse and I don't know how many people died in that building. So that something had to be done. But, you know, they're asking for these surveys now being done, I believe, every 15 and every 5 years. Don't quote me on that. But they're super expensive. I mean, the big one's like 50 grand to get the survey done. And whatever you find in there, you've got to fix. They give you a certain time period to fix. And here's the kicker is that you can't use your reserves like how you used to before. You could use your reserves before you went to a special assessment. And now they're not allowing that. Now the reserves have to be at a certain percentage. So a lot of those condo owners in Florida, what they're being hit on right now is they're being hit with a special assessment, not to do any repairs, but to recapitalize their reserve accounts to meet the minimum threshold. Now, let's just say you meet that minimum threshold and then you get $1 million expense, like windows or balconies is the big one. I mean, they get hit by salt all the time, so balconies is a big safety concern. Fire sprinkler systems, huge expense. Let's say you get $1 million cost, and you've got $1 million in reserves. Before, you might be able to use $500,000 in reserves, hit everybody equally for $500,000 special assessment. Well, that's not the case anymore. Now the case is you have to stay at the $1 million in reserves, and this is just a theoretical number I'm throwing out, depending on the size of the building and what they're collecting in assessments. It's 10%, I think, is the threshold. Now they've got to hit them with a special assessment for the entire $1 million. And, and depending on what that survey comes back with, that is the estimation of that. But in general, nationwide, I mean, builders are sitting on inventory. There's vacant lots that they've already purchased, or tracts of where they want to put subdivisions that they still haven't even built on yet. So I think it's more of a nationwide trend. Again, some states are insulated a little bit better than others. And, migration of population is a big deal right now. So kind of seeing the trends where you're seeing more migration in. Generally, your real estate market's going to be a little bit stronger than areas that you see a negative migration where people are moving out for whatever reason. And obviously, real estate is going to suffer there a little bit. But in whole, it's inventory. Inventory right now is the key. And it's a double-edged sword. You increase inventory, prices will come down, which people don't like, but it's also what the market needs to balance itself out. Well, I think that a lot smarter people than me have said that, and I consider myself way low on the smart scale, but I mean, historically, the S&P is going to be your, you could dollar cost average down, on the crash, buy when it's low, sell when it's high. It's the classic economic driver of everything. And yeah, people are typically selling when markets are crashing. I think the smart people, doesn't have to be wealthy people, but the smart people typically are buying when prices are crashing, because they're lowering their average cost, and eventually the market will find a bottom. And you continue to buy in the bottom, you continue to buy on the way up, you dollar cost average yourself into a better position, and you wait for the market to correct itself, and you walk away with a nice little jackpot at the end of the rainbow. At least that's conventional wisdom. It's worked for 70 plus years. This is not financial advice. Some news. I know we've had a lot of questions. I have heard a lot of questions on the sale that Apex was running. A lot of people were confused about that lifetime fee. I posted this in my Discord, so if you're in my Discord, you probably already heard this, but if you haven't, a lot of people were thinking that the lifetime fee would expire or would cancel out once the sale came to an end, meaning that the Apex sale came to an end yesterday, the 2nd. So a lot of people were worried that if they purchased an Apex eval, let's just say during Friday's Black Friday or Thursday, that they would have to pass that eval before the 2nd. And I didn't think so. That to me didn't make any sense because it said lifetime PA fee. And I was able to pass a bunch of Apex evals yesterday, which was the 3rd. And when I went to go pay for my PA activation, there was 2 options there. There was the standard option and then the second option, which was the promotion. It's a $40. It was a $40 PA fee for 10 years, and then I think it's 1 cent for the. I don't know, I took a screenshot of it. I think it's 1 cent for the remaining lifetime of it. I can't remember exactly what it said. It maybe had a time period, 20 years or something like that. Who even knows what will be happening in 30 years? But so that got kind of put to a rest. So as long as you don't blow the eval, that $40 activation fee should still apply. As long as you bought it during that promo. Some other things I keep hitting this microphone. Sorry about that, guys. I adjusted my chair, and now every time I go to do anything, I'm knocking into the microphone. I am looking to do some evaluation giveaways. I've sent some emails out to all of the partners that I am affiliated with, just to see the process. I've never done it before, guys, so just bear with me on it. I'm just kind of figuring that part out. But you guys have supported me. I'd love to support you guys somehow as well. So I am looking into that. So Nora, I'm a big proponent of more is better. Nobody likes to see a stale Discord server, especially not me. I in theory, the trading floor channel. God, I just did it again. I'm sorry, guys. I know that that's probably sounding like complete shit when I hit the microphone, but where am I? I forgot where my train of thought went here. Oh, the trading floor. So the trading floor was, the concept was always to post about just trade results on my setups on oil, gold, 50-minute Rob reversal, my signals. It's obviously where I give my morning, good morning to everyone, kind of give everybody the heads up on high impact news. And then obviously I post about my live stream going live. But as long as we keep it to trade results, I am perfectly fine with more is better. Because I will be honest with you, a lot of these other channels that I have on here, they stay pretty dormant. I mean, obviously not all my stuff I post in all the time, but like the Trader Rob Strategies channel, the indicators, the alternate strategies, these don't get posted much. And I might condense this, just to be honest with you, just to clean up the Discord a little bit, condense it a little bit more. But yeah, I have no issue with it. I have no issue with it. The only issue I find, which I've gotten pretty good at. I mean, of course, you got to spend money to get good at anything, which, is it's the American dream. But, my biggest problem was I was having a lot of spam on my channel. The big one was the free TradingView subscription, which is all a scam. I would have one where they were talking about crypto. So I've purchased a few bots that now scrub my channel, and they're really good at detecting anything that looks like spam. Still a few get in, and I'm on there shit, at least 3 hours a day. Even though I might not be posting, but I'm constantly looking at, you know, what other people's questions are, and things of that nature. So we've gotten good on the spam prevention, and I'm not really sure. I don't get that many messages anymore about members getting DMs of people pretending to be me. I think that was happening a lot the first couple of years that I had Discord. I did purchase a bot that says it reduces it down by like 70%, but again, I don't really know. But the only really real way to know that it's me is, I believe I have it up in my pinned comments. Just a reminder, I'll never DM anybody on Discord. That's rule number one. So if you get anybody that looks like Trader Rob that is DMing you, just know obviously that it's not me. And then obviously while you're in Discord, I'm the only one that's green, which maybe gives me some superhuman strength, which I doubt. All right, big Apex sale. Let's see what they came out with here. Apex milestone sale. If you ever wanted to trade 20 accounts, now's the time to get them. Apex mile sale. $84.40 all in, all sizes. Apex has now paid out over $600 million. Holy shit. 6 eval sizes, all priced at $196, then 60% off. 60% off first month, 60% off recurring. $6 lifetime PA fees. Wow. Yeah, that's nice. That's real nice. All right, well, let's see here. Let's see if we can do... And nothing's happening in the markets, guys, besides IB in 9 minutes. Take a look at that. That $6 lifetime PA fee is ridiculous. I mean, if there's ever a time to try to get your 20 accounts funded, that would be the time. Under trading. You're back. Thanks, Morgan, for the. I don't typically look at my emails when I'm on stream, but I appreciate that. All right, let's see if the ES here can break through here. We have 5 minutes set for IB, so let's turn those guys on. IB visual. No, Juno, I can't. Like I said, I pay, I think, for 3 bots. I got 3 bots that are all for spamming, and then I purchased one that says that it eliminates, or it helps to reduce the DMs coming out. I don't really have a way of tracking that, but I know that's the biggest problem that most people with a Discord server have, is, you know, getting trapped into thinking that it's me that's asking you to trade crypto, or that I'll trade for you, or all that nonsense. So I think a little common sense goes a long way, but the easiest rule is I will never DM a member. If you guys notice, I do have a private I have a private channel. If there's anything that I ever need to say to a member directly, it'll come in my server. So it'll come down here, Rob's channel. That's a private channel. So if there's any time that I ever need to talk to somebody because I can't DM, that's what I use. Bitcoin, no, I don't really follow Bitcoin. I think the only coin I ever invested in was in Litecoin. Could be saying that wrong. Or I think it was, yeah, Litecoin. I think that was maybe 7 or 8 years ago. And that's still there. It's, I don't know, I think I lost half my value. I don't know. Not a lot. So no, I don't have much opinions on crypto. As a real estate guy, I was wondering what you would think of an investment that being 4% dividends a year. So I guess I'm not understanding that question with the dividends. You got a real estate investment vehicle that's going to pay you 4% dividends per year, and it's raised its dividend 9% a year. So the next year you're going to be getting 13% dividends, and it's going to just increase 9% per year. I don't think that's humanly possible, but I might be reading your question wrong. I mean, I have to say, I think you can... I don't know what money markets are paying right now, but they got to be around 3%, right? 2.5%. Some online banks got about up close to 4%. Your big banks, your big box store rates, probably going to be a lot less than that. Probably going to be around 1%, but I think you'd have to probably go to like an online bank. I forgot which is the popular one that SoFi, I think it was. SoFi always seemed to be paying a pretty decent amount for their money market rates, which that hovers around 3 to 4%. I don't know. That's a safer vehicle, but What do I know? Dividend ETFs. Oh, okay. That's a different story. Well, I think the only issue is they're tied into real estate. So, I know BlackRock was big on the REITs, and their returns were pretty great. Again, a big correction in the real estate market obviously would impact that. And then the only other question I would have on the investment vehicle, is it strictly residential, or is there any commercial component to that fund? Because if there's commercial, that's definitely a sector that I don't see recovering anytime soon. In fact, what the most popular thing that people are looking at right now is retrofitting commercial for residential, which is very difficult to do in the big cities because of a lot of these commercial buildings were built with 2 bathrooms per floor, HVAC systems that were very ancient, sprinkler systems that are not up to code. So most of them are finding that even commercial is very difficult to convert to residential. Again, because of regulations and just they weren't built with that thought in mind ever. But if it has a commercial component to it, I would probably, I don't know, not financial advice, but find that a little difficult. Yeah, well, the companies you're citing there, those seem to be like probably in the S&P 100. So those are always going to be solid in a downturn. I mean, your big names will typically do. I mean, they'll all hurt, but in a recession, those typically your Targets, your Walmarts, gas, energy. I mean, people still need to heat their homes. They got to fuel their cars. They got to buy groceries. They got to buy essentials. It's when you start dabbing into anything that has things to do with like external luxury, I guess, quote unquote luxury items that people could do without when they don't have money. So if you stay in that S&P 50 or 100, those typically don't get hurt as bad. Not like the Russell, where if the S&P, has a cough, the Russell will have the full-on flu. I feel like this is a stream of Fox Business News. I'm on the squawk. All right. I think Q breaking a little bit here. Let's see. I don't think any major structure though. Doesn't look like to me. No, this is all crap. Yeah, just based on those numbers, it's not bad. Again, not financial advice, but taking a look at what the averages are. The 9% is a pretty nice number. Be right back. Trump meets with African leaders at 10 a.m. Fed Bauman speaking at 11. I'm gonna go refill my coffee, guys. All right. Reloaded with coffee. If Rob is any indicator, I think I need to invest in coffee. Oh, man. So if you guys see, I have got some lines up here on the chart on the NQ. This would be like a super signal for me. The only issue with this one is that the stop loss is pretty much right at the IB low, which I'm not a huge fan of. But these are bigger, kind of some bigger scalps. Just kind of want to see what happens with it. Again, this one for me is not the greatest setup just because it's sitting right at the IB low. And the only reason why I've got it up on here is I think I let you guys know. I forgot what it was. Sometime last week, I passed 2 Top Step combines. So I've got two. I got 2 funded 50Ks with Top Step, but I don't like their platform at all. I find it very difficult to scalp around. So I figured I'll put up these super signals when I see fit, and then just kind of take them in on the Top Step one. Because those are just easier for bigger trades that don't need a lot of manual work. All right, so with the NQ. This might get a little confusing here. Maybe I'll leave it in white just to differentiate. There's a decent setup here. Entry at the 25, 553, 25, targeting the 25, 563, 50, and then the 25, 569. So pretty much where my entry would have been on my super signal, that would be TP2, with a stop here at 25, 542. Could be kind of sweepy, but I think we've got enough room here. Let's see what the 53s are doing. Yeah, it looks pretty decent there. Let's see if I can make this green. Load, TP. So I know this one's a little confusing to read, but the entry would be at the 25, 553, 25, targeting the 25, 563 and the 25, 569, with the stop at the 25, 542. That's just bigger areas of unbalanced volume, just kind of a bigger scalp. A much bigger scalp, I should say, than what I typically look for on my normal signals. Let's see if we can get... Morning, Nate. All right, we'll take a look at the footprint chart here, see what happens. Right now, the 53s are not showing much strength at all. It's all pretty much concentrated at the 60s. So I'm not liking that too much. Well, right now it's just there's no defense here. There's really no interest in my entry, and there's really no interest between my entry and stop loss. So right now I would say this is probably about a B- setup. You know, I want to see it with price action coming in between TP1, TP2. I think once we get a little closer to the 60s, we'll see what kind of comes through here. And then we got IB low, which is another area that they'd be very interested in. All right, just broke through that liquidity at the 60s. '50s now coming in pretty strong. Let's see what they want to do with this here. I got a lot to go for right down here. Okay, I think that was a tap right there. We might probably miss that tap by a tick there. Shit. I think that was a tick off. So at this point, this would be an invalidated setup at this point. I believe. I don't know if you got filled there or not, but... So that's invalidated. So the reaction point happened exactly, but I think that was a tick off. Yep. That was a tick off right there. Son of a gun. I definitely wouldn't be going into this at this point because the 40s now are very interested. Can't say it enough. Yep, like I thought they were going to be coming for this IB now. Now let's see what happens here. Alright, that was a big explosion there, right through IB. No footprint confirmation at all. It kind of played out like I thought it would. Get rid of this guy, this guy, this guy, this guy, this guy. And that guy. All right. Now, they left this in their wake. So entry at the 25, 562.50, targeting the 556.25 and the 25, 551.75 with a stop at the 568.75. So you guys can see the numbers a little bit better, and then I'll switch over to the footprint. Mm-hmm. Mm-hmm. Let's see what we got here. Don't do it again. Oh, man. That just took out TP1 and TP2. A point away. So, wow, man. Wow, wow, wow. That's frustrating. Yep, definitely invalid. That's two, man. Two, one by a tick and one by a point. Oh. Well, I think that's time for me to call it a day, guys. That's usually a sign. Sign from God. All right, I think that's enough for today. Happy with that win that I took. Two more setups that we mapped out. One unfortunately missed by a tick, and then the other one missed by a point. Both the reaction points were on key, but I was a little short. Just a little short there. All right, guys, stay patient out there. I mean, the markets are a little bit better movement here this morning, but nothing crazy. And this IB low, let me just take a ruler here. It seems to me like a lot more than that. 15 and 7 points, 15 and 3/4 points. I was saying if you were on just a resting limit over there, I didn't see a footprint confirmation at all there though. So let's just see. Let's just see. So Nick, we had an entry mapped out at the 25,562, and as you can see, price action missed my entry by a point, and then took out my TP1 and my TP2. So in my eyes, that trade already played out. Now, could it play out a second time? Possibly, but the unbalanced volume that I was pegging from right here, that already knocked that out for me. Let me just see if there was any footprint confirmation here. So in this case, there is no setup because the setup already happened. Now, and I know that there was a level of defense. I think it was like at the 65s or 70s. So right there, you could have got TP1. But this is the reaction that I'm looking for. This right here. and that already happened. So in that scenario, I invalidate my trades at that point. And that's exactly what happened on the previous setup where we came a tick away from our entry. It was even closer than this one. And of course, you probably get TP1 and TP2. And it's been a strange December, strange end of November. Price action's been a little wonky. But at least I'm seeing the markets clear. All right, guys, I'm gonna call it a day here. Up 2,400, so I'm happy with that. And good morning, guys. Apex just announced a really, yeah, about 85 for any size, including PA. Yeah, the PA lifetime PA fee $6 on that. So use code TraderRob if you guys are gonna pick up any Apex accounts. I appreciate it. But yeah, that's a great sale. All right, I'll see you guys tomorrow at the market open. Hopefully price action here gets a little cleaner. 3 setups, one for TP1, TP2. Second setup we missed by a tick. That swept TP1, TP2. And then this setup right here missed by a point, swept TP1, TP2. Both those got invalidated. This one would have got you your TP1, but would have missed TP2. The initial reaction was right there. So that's what I'm looking for. All right, guys, take care. Stay patient in the markets today. You know, don't force anything. And I'll see you guys tomorrow, market open. Rob, are you green December? Yes, I am. I think December 1st. I don't know, was it the 1st or the 2nd? It's a good question. 3, 5, yeah, no, I'm definitely green because I've had a 3, 1900 and a 2400. So yeah, we had a big losing day, I think, on the first day. It was a nasty one. All right, guys, take care. I'll see you guys tomorrow.